So, the global economy in early 2025. It's a fascinating and frankly pretty turbulent picture right now. What looked like a year of runaway optimism has slammed into some serious headwinds. We're talking everything from escalating trade wars to some really surprising new safe havens for money. Okay, let's get into it. Here's what we're going to cover. First, we'll look at just how dramatically the mood in the market has shifted. Then we'll unpack this new global trade war, piece by piece. After that, we'll explore the huge rivalry between China and the US, see where investors are running for cover, and then wrap it all up with a really interesting deep dive on the Dubai property market. All right, so let's set the stage. The year really kicked off with this buzz of optimism, especially around the US economy. But that feeling has just evaporated. It's been replaced by a much more cautious, much more uncertain reality. This quote from Ahil Mansour at Octave Asset Management just nails it. While almost everyone else was shouting about US exceptionalism, he was already saying, hey, hold on a second. And, well, turns out that caution was absolutely the right call. This really captures that mood swing perfectly. The entire story has flipped. We went from this idea of unwavering American strength to a world facing these undeniable global headwinds. So, what are these headwinds? Let's start with the big one. And that brings us to the trade war. In April 2025, the United States decided to reignite global trade tensions, kicking off a whole new cycle of tariffs and retaliation that's shaking up supply chains everywhere. And the official reason for this pretty aggressive move: a massive, record-breaking $1.2 trillion trade deficit in 2024. The administration held up this number as Exhibit A for what it calls unfair trade practices. Now, everyone's focus tends to be on China, but this deficit problem is truly global. I mean, look at the data. The US has huge imbalances with Mexico, Vietnam, even Germany, and that really helps explain why this whole thing blew up so wide. And the speed of it all was kind of breathtaking. The new strategy gets announced on April 2nd. Just 3 days later, a universal 10% tariff is in place. And 4 days after that, boom, even higher targeted tariffs. The speed alone just sent shockwaves through the system. And the severity of these things was just stunning. Vietnam got hit with a 46% tariff, China 34%. And we're talking about key allies here, like the EU and Japan, getting slapped with duties over 20%. This wasn't just a little warning shot. It was a complete upending of global trade. But these trade wars, they aren't happening in a vacuum. They're really a symptom of a much, much bigger story. China's incredible rise as a tech power and the challenge that poses to decades of American economic leadership. We're watching a fundamental rebalancing of the world order right before our eyes. You see China making this almost sci-fi leap forward, while the more established economies are scrambling to adapt to this new reality. And the scale of China's progress is just wow. It's not just about being the world's factor anymore. We're talking about becoming a leader in the core technologies of the future: AI, renewables, affordable electric cars, even space exploration. That's a huge shift in where global innovation is coming from. Meanwhile, that whole American exceptionalism story is starting to show some serious cracks. U.S. stocks look pretty expensive, sitting at a 50% premium to the rest of the world. And a lot of the economic growth we're seeing is being propped up by record government spending. Because of that, global markets are starting to go their own way, not just following Wall Street's lead anymore. So with all this chaos and uncertainty, you gotta ask, where are smart investors actually finding safety and value? Let's follow the money. Yeah, this is the question, right? The old playbook of just betting on the biggest, most established players, that's looking pretty shaky. Now, the game is about finding these specific little pockets of opportunity in a world that's breaking apart. So where is that opportunity? Well, this data gives us a pretty good clue. It basically shows us which markets are on sale, but are also seeing their profits grow. And look at the UK and South Korea. Their stocks are cheap compared to their assets, and yet their profitability is soaring. I mean, that's a really powerful and, frankly, rare combination right now. And it's not just about stocks. Look at what governments themselves are doing. They're hedging their bets by loading up on gold. In 2024, Poland, India, and China were buying it up by the ton, trying to diversify the reserves and find that classic safe haven asset. It's a big reason gold prices have been hitting record highs. Now, to see how all these huge money movements play out in the real world, let's zoom in on one really fascinating case study, the Dubai real estate market. Is it a sustainable boom, or is it a bubble just waiting to pop? So the appeal is pretty obvious. We're talking about a tax-free environment where you can get rental yields of 7 to 10% a year. That is more than double what you might get in London or Mumbai. For global investors who are hungry for returns, that's incredibly hard to ignore. And you can see the results right here. The market's path has been a total roller coaster. After a big dip, sales have just shot through the roof, with really strong growth expected to continue. It just shows you how much money and confidence is pouring into the city. But, and this is a big but, there's a dark side. This quote from InvestAsian is a brutal reminder of Dubai's past. Back in 2008, the crash was so bad that people literally just left their Lamborghinis and Ferraris at the airport and fled the country. This history of boom and bust is exactly why some analysts are ringing alarm bells today. And those risks are very, very real. Dubai has a well-known history of these vicious boom-bust cycles. There are already signs of a property glut, with some reports of occupancy rates being super low. And, of course, its whole economy is pretty vulnerable to global recessions and any instability in the region. However, Dubai isn't just sitting back and ignoring this. The Dubai Land Department has actually rolled out new regulations this year to tackle these exact risks. Things like mandatory escrow accounts for developers, a fully digital registration system, they're all designed to build confidence and convince people that this time it's different. And that really leaves us with this final thought. As the entire global economic order shifts around us, from trade and tech all the way to real estate, the old playbook just might not work anymore. The real risk, and maybe the real opportunity, isn't about avoiding the new world, but about figuring out how to play by its new rules. Thanks for joining this explainer.